Good evening, everybody. This is Ron Wheeler, manager of options trading here at VectorVest, bringing you tonight's special presentation, Printing Money with the SPX. Now, before I get into the official presentation, I just want to do a little bit of a story about this. I've been trading now for 25 years, and out of those 25 years, the S&P 500 has always been a big part of what I did. Early on, I was a futures day trader. I traded a lot of S&P futures, and then as I got older, and I wanted to be a little bit more laid back from the market, S&P futures transitioned into S&P options. So what I do now, my primary systems are based on S&P options. So let's talk a little bit about that tonight. Now, in doing that, I want to make this really part two of last week's presentation. If you remember, we talked about the system that has completely changed everything. And we talked about, even though the overall markets this year are down, in some cases over 10%, I know all the indexes are mixed a little bit, but they're all down. Our system has performed very well this year. We're up around 9%. Now, would you believe that that 9% is primarily index options trades? So let's do this. First off, I've updated the trading results. I've updated them through the end of this week. Now, in full disclosure, I still do have one SPX trade on right now, and I'll actually share that with you in this presentation. It hasn't been profitable yet, nor have I lost money on it, and I'll show you what that trade is and where it's placed. But let's do this first. I want to go back into that Wingman Tracker software. And again, the reason why I like Wingman Tracker is because it allows me to really just hone in on specific trades, specific strategies, and then also, of course, my results. All right, so what you can see here is this is my total P&L for the year. Now remember, not all of those are based on options income trades. So the first thing I need to do is I go to strategy and I'm going to type in vertical spreads. So these are all of my option income trades. We're up about 10% for the year. Now what I'm going to do is I'm going to bring that down solely to the SPX. Now if you take a look, the total P&L is 10,000. If I bring it to the SPX, now it's at about 9.2%. So as you can see, this year it's been a little bit easier, even in this volatility, to trade the S&P 500. And what I want to do again tonight is show you how I do this and really tell you and explain why it's an easy approach that I think everyone needs to have in their trading arsenal. The first thing I want to talk about is how trading and investing can take a lot of time. When you trade, a lot of times you got to go out there and find the stock. You've got to go out there and look through the different options. And a lot of comments I get is it takes me a lot of time. Well, bringing this down to one symbol, the SPX, really saves you a lot of time. There's not a lot of research that you have to do. We start with the market timing, we look for market direction, and then immediately we can go to one symbol to take care of our trade for the week. Now, why do I trade the S&P 500? Well, I like it because it's a broad-based index. It's less prone to those large moves that are based on news from a single stock. We all know Netflix the one day dropped 35% on earnings. Well, is that going to move the NASDAQ? Of course it can move the NASDAQ. But with the S&P, you have a 500 symbol, actually more than that, exchange. And what that can do is it can buffer the blow of one stock moving against you. I like trading these broad-based indexes. Now, when we get into the S&P specifically, there are two really ways to trade this. We could trade it off the SPX, which is a cash-based index, or the SPY. I prefer the SPX for a couple of reasons, because number one, it has a lot larger premiums. That means I can trade less contract size and my commissions won't be as high. Another thing I like about the SPX is it's what's called a European style option. I can trade that without any worry about early exercise or stock transactions. It's cash settled at the end of expiration. So there's no stock transactions that'll ever be done. Now, another thing, and I'll just mention this in passing, we are not tax experts here at VectorVest, but if you trade the SPX in a normal trading account that's not an IRA, it is also taxed similar to futures. There are special tax rules for the SPX. It's a 60-40 capital gain split. You can research that as well, but it is a very good bonus that you get from trading SPX options. Now, what our general principle is, and I'm going to focus on bearish trades because I think we can all agree that the market has been bearish this year. So what I look for is I look for over the next 9 to 25 days. I can vary how long I want to be in the trade by what I use for my expiration. So I look over the next 9 to 25 days, and using an option's internal statistics, I can look for options that give me a 60% chance of success. Whereas normally you buy a stock or you sell a stock, it's a coin flip, right? 50-50. Now I'm talking pure statistics here. I don't want to talk about different trading strategies and trading styles. I'm talking pure statistics. Flip a coin. If you buy something, it's got to go up. If it doesn't, you don't make money. What we're doing here is we're using SPX options and we're picking a strike price that statistically has at least a 60% chance of success. That gives me a 40% chance it goes against me. Now, if it does go against us, because not every trade is going to be a winner, if the trade does go against us, we simply take the loss and move on. We don't repair, we don't adjust, we don't do anything special. Now, the trade that we're talking about here is called a bear call credit spread. And again, tonight I'm going to focus on the bearish trades because the market's been bearish. Now, in a bear call credit spread, here's what we do. We are going to sell a call that has a 60% or more chance of success for us. That means there's a 60% chance that the market will not touch that price. Okay? When we sell that, we receive a premium. All right? Now, what we also do, because we don't want to have an unlimited risk, we also buy an insurance policy. This will protect us in case the market makes a huge sudden turn. Now, the great thing about the SPX is it's not really going to do that because there's no earnings announcements like a Netflix where you open up and the stock's down 35%, or like a Biogen, right, where they have an announcement that comes out from a clinical trial and the stock goes down 40%. I bring Biogen up because I'm kind of familiar with that one. So this is the great part about the S&P. We have a locked in maximum loss. And that's really the beauty of how this works. So what I want to do, I want to take you through a trade that I did last week. And then what I'll do is I'll show you a trade that I'm currently in now. Now, again, the trade hasn't won yet or it hasn't lost. I'm still in the trade awaiting my profit target, fingers crossed. But first off, let's take a look at my trade from last week. I'm going to go over to Wingman Tracker and show this position. So in Wingman Tracker, I'm going to go to my analysis to my closed positions, and I want to just concentrate on the trade that I closed most recently, which was 425, actually on Monday. And I want to look at this trade right here, the one that was 422 to 425. If I open that trade up and I click on the details, this was the trade right here. So I sold a 44.45 call using the May 13 expiration, and then I bought as insurance a 44.55 call to protect the position. You can see that I did that on 5 contracts. Now again, with the expiration, I'm looking for the next 9 to 25 days. All right, so just to add a little bit more realism to this, this is actually the broker transaction. So what I do is I bring all of my transactions in from Thinkorswim to make it easier for me to look at the trades. So you can see right here at 9:41, I'm going to try to keep this so you can kind of see it a little bit easier. At 9:41 on 422, I sold a 44.45 call and I bought a 44.55 call. So you can see that's the transaction right there. I did it early in the morning when the market looked like it was going to sell off pretty good. And then you can also see that 1775 was the price right here. and then also 1560 down here was the price that I entered in on the 44.55 leg. Now, let's switch over to a graph. So this is the S&P 500. This is actually the day, 422. Now, you're seeing the entire day, by the way. When I first put that trade on, remember, it was about 9:30 in the morning, well, 9:41. So when I put that trade on there, I looked for a option that gave me at least a 60% chance of success. So if I looked at this trade and I looked at the option statistics, 44.45 gave me that statistic. So I sold an option right up here. Now, by doing that, again, what we've done is we've created some room that now gives me a 60% chance of success versus a 40% chance of failure. The market can now go sideways, it can go up, it can go down, and I still have room to make money. This is why this trade has such a good probability in the long run. So what happened? Well, obviously, as you can see, the market sold off that day and it closed really at the low that day. Now, Monday morning, the market opened up lower again. And what you're going to see from my transaction in the broker at 9:30:09, 9 seconds after the market opened, I took profits on the trade. Now, what I like about Thinkorswim is that I can set these orders ahead of time. So I actually had an order set ahead of time that really was automated. So when the market opened up that morning, boom, I got filled. I didn't have to do anything. And the trade was closed. Okay, that was it. Quick and simple. I did that on 5 contracts. And as you saw from Wingman, let me bring that back over into the picture, that resulted in about $1,000 profit in only a couple of days. Now, let's talk about something a little more current, something that's open right now. So let me switch over back to my presentation. And this is the trade that I placed on Monday. Now, I exited that trade Monday morning at about 11:14. I teach an SPX income options class at 11 a.m. on Monday mornings. So at 11:14, I entered into another position. Now, this one, again, using the statistics of the option, I ended up selling a 43.35 call and buying as insurance a 43.45. Now, I sold that for $4.30 or $430 per contract. As you can see, I have 4, 6, 8, 9, 10 contracts. I took in a premium of $4,300. Now, to do a position like that, I would recommend, that you trade about $100,000 in capital. Okay, you're going to be risking at most around 1.5%, maybe 2% of that account in this trade. You can trade it for a little less account if you'd like to, but I'm a big proponent of making sure your risk is not a large portion of your capital. So from that area, again, I have a position where I have a 60% chance of success. Now you can see the market on Monday sold off and then it rallied towards the close. So even with that big reversal, I still had room to operate. Now, if you've been following the market this week, you probably all know how volatile it actually has been. Well, here is an updated graph to right here. So on Thursday, the market shot up again. I think we were up 100 points yesterday, closed a little bit off the high. And then now today, the market gapped lower and it's moving much, much lower. Now, you can see when I took this screenshot, the market was down about 24 points. That was this morning. And if I go to the real-time graph, now we're down about 68 points. So this is what the trade would look like right about now. So again, the beautiful thing about this is it gives me room. All right. Now, what happens ultimately if the trade goes against us? Well, if the trade goes against us, we are going to exit when we pass the 43.35 call. Okay. Now, in that trade, I would lose about $178. So $1,780 based on the 10 contracts. Now, remember, if I win the trade, if I make money, I'm going to make about $2,150 because my goal is to collect half the premium. So my goal is to make 2150, and at worst case, I will lose about 1800. Now, this is important because as an option seller, one of the things you have to be worried about is one bad trade wiping out a bunch of winners. You can't have that. I can give you a system that's 95% accurate. The problem with a system like that is for every winning trade, you might make 100, and every losing trade, you might lose 2,000. It's all well and good until you get one or two losers in there, and it's wiping out all your gains. Now, that was this week. That was last week. I want to show you over the last 6.5 years. So I'm basing this on one contract, okay? If you would have placed one contract of the S&P every week, I did this on Monday. On Monday morning, you placed one contract on the S&P. Now, you can do this trade for as little as $2,000. For risk reward reasons, I would recommend you go up to a $3,000 or $4,000 account so you can get started with this even with a small account. Now, starting in 2016, all right, take a look at the P&L over those 6.5 years. Okay, pretty good. All right, you've got 328 trades, 200 winners, 61% success. That's where I base my 60% from. 39% losers. My average loser is my average winner is about $146, and my average loser is about $149. Now, this takes into account bullish trades and bearish trades. Bullish trades are a little bit less on the average win, a little bit less on the average loss, whereas the call spreads are a little bit more on the average gain, a little bit more on the average loss. So that kind of takes into account all of that. So let's say you started back in 2016 with a $4,000 account. That $4,000 account right now would be worth about $14,100. And this is updated through the end of last week, by the way. All right. Now, like any trading strategy, I really want to make sure you understand this, okay? That there are going to be periods where, like any system, you might stumble a little bit. So if you take a look at, during 2020 and 2021, we kind of traded profits back and forth. But like any system that works, if you stick in it for the long haul, it will be successful. Now, just to give you a little current update on that trade from Monday, it is up about $700 as we talk right now. So again, we'll see how that trade plays out. You guys can monitor that as well. Hopefully, it's one of the 60% that wins. If it's one of the 40% that goes against me, it's okay because the losses will overall be very small in proportion to our wins. Now, if this is something that you are interested in learning, we are launching an all-new options paycheck experience. If you've seen the options paycheck before, or maybe you've taken it in the past, this is a completely brand new redesigned course. This is probably the most comprehensive program for generating profits from options trade that you will find. We take you everywhere from option basics all the way to becoming a profitable trader, finding the trades, setting them up, managing properly, just like I've shown you a snippet of what we do today. So the course, again, is 8 modules. We made them so each module builds on the one prior. As you go through the modules, you're getting closer and closer to that end goal, which is that consistent income. So just a quick rundown of what the modules are. The first 2 modules are what we call the Option Income Foundation. A lot of people try to build a successful income portfolio, but they base it on such a weak foundation of knowledge. Now, we understand. We've been there. This is why it pays to learn from a team who's gone through this before. Now, the outcome for Module 1, you're going to know exactly how calls and puts work. You can use them in your trades, and you're going to know which terms to avoid and which to pay attention to so you don't get frustrated or waste time. Now, in Module 2, you're going to learn what a spread is, what we did tonight, the bear call spread. You're going to be filled with confidence that you can use that to build your profitable income system. Now that we've constructed that trade and options knowledge, now we're going to lay out the step-by-step plan to placing these trades to generate these options paychecks. Each step along the way from here stacks probability in our favor and it reduces risk. And it all starts knowing when to trade. We're going to give complete clarity on market trends. So instead of looking at all types of trades, we're going to focus on bullish or bearish based on market direction. Now that we know the direction of the market, you're going to want to know what stocks are likely to move. Now tonight I've talked about the S&P 500. Also in this section, we'll talk about the index trades, so you can even make it more quick and simple. Now that you've got that list of stocks, it's time to narrow it down to the best candidates. By using the rules in this module, you'll make sure you're getting paid the most for your trade and making it so you can make money even if the trade goes against you. Now, again, we're going to continue to stack probability and reduce our risk in Module 6 by the way we set up the trade. Here, you're going to make sure the trade has the perfect combination of risk and reward. You'll know exactly where to set up your strikes. You know, great trades don't happen by accident. They happen because of careful planning and strategically setting them up correctly from the beginning. And now that we've got those high probability trades picked out, Module 7 teaches you how to have your plan in place ahead of time so you know when to exit, not only to take profits, but to minimize losses. No more deer frozen in the headlights. You're going to know what to do no matter what the market throws at you. You'll know how to react. That allows you to hopefully trade a lot more stress-free. And then finally in Module 8, all about entering your orders. Entering your orders is very important to do this properly as an option trader. We're going to teach you the key principles of this. That way, whether it's your first trade or your 500th trade, you're going to be able to break this down into muscle memory and repeatable steps. Now, we also offer a 100% money back guarantee. If you take the course, don't think we've done our job, we will give you a refund as long as you actually went through the course. Now, we also give you a mastery package. The way the new option paycheck experience works is this. You go through the first month. So next month in May, you're going to go through all of the curriculum. We're going to have 3 module mastery sessions a week, 3 hours of live training. You're going to watch the videos recorded and then come to our mastery sessions to ask questions. We have a private Facebook community, a private dedicated email. If you don't have the Options Pro software, we'll add that to your subscription for the next 2 months. And then, of course, if you're on a trial of VectorVest, we'll also extend that for the duration of the program. Now, in June, we have what's called Implementation Month. You're going to be able to go into our live trading sessions that we do early in the week, our S&P and our stock trades. You're going to be able to go in there with me, and we're going to be showing you how we place these trades. I showed you snippets from my broker today. It's the same way I do it with my clients. You'll be invited to those sessions. And then a follow-up to that is we have live office hour sessions. 2 hours a week, we open up a room. You can come in and ask me questions, trades that we've taken, trades that you've taken, whatever you need to look at. Now, finally, we have an SPX paycheck system bonus. This is like I showed you today, 15 minutes a week, one symbol, one setup, live trading sessions on this. This is a new bonus that we're adding to the paycheck system and the paycheck experience. If you've already signed up for the paycheck experience, don't worry, we're including this for you as well. Now, I posted a comment from Alan in our private Facebook community. Take a look at all these trades he's done. Now, I get a question a lot of time, Ron, do I have to do these once a week? Can I do them more? Well, you just saw me. I do them on Mondays with my clients. I did a trade on Friday. You can do these trades as often as you like, as long as you're controlling risk, that system, and as long as you're controlling your probability, the 40%, 60% rule, then you can trade this as often as you like. So if you take a look at the entire options paycheck experience, total value of $54.75. If you're going to sign up for it, remember it starts next week live. The first modules are open now. You can get started right away, start learning tonight, and next week we start the live mastery sessions. Now, it's one-time payment of $12.95, optionspaycheck.com. Get yourself registered up. See how you can add this SPX income approach to your existing portfolio, even if you have only a small account. We also offer a 3 monthly payment of $4.95, pay $4.95 up front, and then we bill $4.95 every 30 days. So a couple of different options for you depending on your needs. Get signed up, take a look, let us show you, even with a small account, how we can help you build a solid income approach. Thanks everyone, have a great weekend, and we'll see you next time.